Right, hi everyone. Welcome to today's live analysis session brought to you by IC Markets. Right, trust you've all had a great weekend, spending quality time with your family and friends, and all recharged for a brand new trading week. All right, before we start, let's take a quick look at the disclaimer. Right, please take note that this is marketing communication. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. My name is Ketan Rameshchandra. So this webinar is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right. Before we dive into the charts and trading view, let's take a quick look at what's on the economic calendar for this week. There's quite a few things going on, but I'd like to bring your attention towards the UK Labour Force report that's out tomorrow, Tuesday, 10th of September, as well as US CPI on Wednesday, the 11th, and of course the ECB interest rate decision that's going to take place on Thursday, 12th of September. Right, here's the calendar for this week. Right, so you can see we've got quite a few things going on as well. We've got of course, the labor force report, which is going to give us further insights into the claimant count change, average earnings index, as well as the unemployment rate of the UK. We've got GDP data as well on Wednesday, alongside US CPI data. We've also got, of course, the ECB releasing its monetary policy statement on Thursday, 12th of September, 12:15 p.m. GMT, where they're expected to cut the main refinancing rate by 60 basis points. So they're looking to bring it down from 4.25% to 3.65%. In addition, we also have ECB President Christine Lagarde delivering a press conference half an hour after the monetary policy statement is released. We've also got PPI data out on Thursday, 12:30 p.m., which measures the level of wholesale inflation in the US. Now, before we take a look at what's coming up this week, let's do a quick review of the non-farm payrolls that were released last Friday. Right, so the Bureau of Labor Statistics (BLS) released its employment report last Friday at 12:30 p.m. GMT, where we saw the unemployment rate edge down a little bit lower. It was as high as 4.3% in July, now edging down lower to 4.2% in August. However, when you look at the non-farm payrolls change, we saw uh, NFPs miss its estimate once again. This is the second month in a row where the non-farm payroll has come in lower than its estimate. In this case, it came in at 142,000, which was well below the forecast of 164,000. In addition, July's figure as well. July's figures came in at 114,000. This was revised down lower to 89,000. Now, take note, downward revisions have occurred throughout 2024. Right, so downward revisions along with lower job growth signals a softening of the labor market as well. And not only did non-farm payrolls miss its estimate for the second consecutive month, we can see that over the last 3 months, job growth has come in lower than its 12-month average as well. The 12-month average currently stands at around 196,000, and we can see very clearly job creation has come in well below this average for the last 3 months as well. So we are seeing uh, uh, saturation of the US labor market, right? So we can see the unemployment rate rising higher, while we can see job at the same time, we are seeing job growth being stagnated as well, right? Despite a softer non-farm payroll figures, demand for the dollar actually remained pretty strong. We actually saw uh, buyers coming in to buy the dip in the dollar index following the non-farm payrolls release. And we are seeing that bullish momentum continue today as well. So despite an overall softer non-farm payrolls report or non-farm payrolls figure for the second month in a row, combined with a downward revision to the prior month, we're actually seeing demand for the dollar remain pretty elevated. All right, now let's look at uh, what's up for the labor force report. Right, we can see. All right, hi everyone. Apologies for the technical issues. Right, we're back online now, so let's resume today's uh, session. And of course, if you have any requests for any analysis, do let me know. Do drop your request in the chat box, and I'll be more than happy to go through the analysis with you. Right. Okay. So before, like, let's see where we stopped off. Right. We were basically looking at the economic calendar for this week. Right. So there's quite a few things going on, but I'd just like to bring your attention towards the UK Labour Force Report, US CPI, and the ECB interest rate decision as well. Right. So before that, we were taking a quick look at uh, the non-farm payrolls that were released last Friday, 6th of September, where we saw the figures for August come in lower than its forecast for the second consecutive month, while uh, July's figures were revised down lower as well. So take note, throughout 2024, we've seen downward revisions for all prior months, which signals a weaker labor market. And of course, we saw the unemployment rate edged a little bit lower as well. That was the only positive thing out of this employment report by the Bureau of Labor Statistics. Otherwise, it was another weak non-farm payroll figure as well. As you can see, not only did it miss estimates for the second consecutive month, while July's figures were revised lower, we can see that over the last 3 months, non-farm payrolls have come in under its 12-month average of 196,000. Right, so that signals a weakening labor market. But despite a softer than expected non-farm payrolls figure, we saw demand for the US dollar remain strong on Friday, and that bullish momentum has continued today as well. Now, looking at some of the key economic events for this week, we've got UK Labour Force report out on Tuesday, 10th of September at 6 a.m. GMT. Right. So we've seen a spike in claimant count change, which tracks the number of unemployment benefits. So that went as high as 135,000. And we're looking at another elevated figure for the month of August with a reading of 95.5 thousand. Combine that with an unemployment rate that's elevated, right? We could see the pound come under significant selling pressures on Tuesday's 6 a.m. GMT. Right. So once again, should we see higher than expected claimant count change accompanied by an elevated unemployment rate, we could see the pound face significant headwinds on this day. Looking at US inflation, right, that's out on Wednesday, 11th of September, 12:30 p.m. GMT, we can see on a monthly basis, headline and core CPI has moderated lower and has grown 0.2% month over month in July, and we're expecting another steady increase of 0.2% in August as well, right? So we are seeing the monthly rate increase at a steady pace, which would signal that the annualized reading continue to moderate lower. We can see headline CPI, which is the chart on the left, moderate significantly lower from 3.5% year over year in March down to as low as 2.9%, while the core reading has dropped from about 3.8% in March to as low as, I believe this is about 3% in July. Now, looking at the forecast for August, we can see that headline CPI is expected to moderate even lower, dropping from 2.9% down to 2.6%. And we can also expect the core reading to head lower as well. So should we see another round of softer than expected CPI data, that's quite likely going to create strong headwinds for the dollar, and we may see the dollar index resume its downtrend from Wednesday onwards. Right, and finally, we have the ECB interest rate decision on Thursday, 12th of September. That's out at 12:15 p.m. GMT time, followed by ECB President Christine Lagarde's press conference at 12:45 p.m. GMT. Now, the ECB is expected to cut its main refinancing rate by 60 basis points, cutting it from 4.25% down to 3.65%. Right, part of this reason is we can see inflation getting very close to the ECB's target of 2%. We see headline CPI at about 2.2% year over year for August, and the core reading stands at 2.8%, right? Both of which are inching closer to the ECB's target of 2%. And at the same time, we are seeing a very dire manufacturing sector in the EU, right? We can see that manufacturing activity has remained in contraction for more than 2 years, right? Remember, reading below 50 constitutes contraction. Whereas for the services sector, we see it expanding since February, right? A reading over 50 indicates expansion. However, overall activity, PMI activity is pulled down by the manufacturing sector, combined with inflationary pressures dissipating in the EU. We are very likely to see the ECB move forward with a second rate cut in 2024. Remember, in July, the ECB kept its main refinancing rate on hold at 4.25%. They made the first cut, I believe, in June, where I believe the first rate cut took place in June, and in July they kept it on hold. But it now looks like they're ready to move forward with a larger than expected cut of 60 basis points. All right, now let's start uh, now let's move on over to the charts and trading view and begin the analysis on the dollar index. And of course, should you have any requests for any other currency pairs, do let me know. We'll start with the dollar index, cover the commodities such as gold and crude oil, cover the indices, and then come back to the major currency pairs as well. Now, looking at the dollar index on the daily time frame, right? If we zoom on down to the 30-minute time frame, we can see here that this candle here at 12:30 p.m. GMT on Friday, 6th of September was when non-farm payrolls was released, and then at 1500 hours on 6th of September was when uh, Federal Reserve Governor Christopher Wallace delivered his speech as well, both of which were dovish events, right? Remember, non-farm payrolls missed its estimate for the second consecutive month, while the prior month's, which was July's figures, were revised lower as well. And Governor Wallace was also pretty dovish during his speech, which caused you can see which caused the dollar index to spike down lower as well. However, the each downward fall for the dollar index was met with strong demand, right? We saw a lot of bids come back in, and we saw the dollar index retrace higher after each fall as well. So we can see demand for the dollar has remained pretty elevated despite a softer than expected non-farm payrolls data last Friday. Now looking at today as well, we are seeing a very strong uh, uh, green candle as well, right? This bullish momentum from last Friday has continued today as well. And what we're looking at is a potential bullish breakout through this bearish channel here. We can see the dollar index has been trading in this bearish channel since the 30th of July. We clearly see a series of lower highs and lower lows and multiple touches to the upper bound and lower bound on this bearish channel. And today we are looking at a potential bullish breakout. And should we see this bullish breakout take place, the dollar index could potentially rise up towards its pivot level here at 102.55, which is identified as an overlap resistance. This is a strong overlap resistance level that has the presence of a 38.2% Fibonacci retracement, as well as a 61.8% retracement here. So we have a strong Fibonacci confluence around this zone. So this 38.2% Fibonacci retracement was found by starting the retracement from here, this swing high on 28th of June and ending with the swing low on 27th of August. We find the 38.2% retracement, and the 61.8% retracement is found by starting from this swing high here on the 8th of August and ending at the same point, which is at 27th of August. So we have a strong Fibonacci confluence identified by the 38 and 61.8% Fibonacci retracement levels that also aligns pretty well with this overlap resistance at 102.55, which has been identified as the pivot. And of course, we see the dollar index continuing to trade underneath the bearish Ichimoku cloud, which highlights the bearish momentum, right? So, but as of now, we may have a potential bullish breakout above this upper trend line of the bearish channel, and that could potentially see the dollar index rise up towards this pivot level here. Remember, we have US CPI data out on Wednesday, so perhaps for the first couple of days of this week, we could see demand for the dollar remain elevated, and it could drive the dollar index up towards this pivot level here. And then come Wednesday, should we see another round of softer than expected inflation data out of the US, right? If CPI marks another month of lower figures or cooler figures, we can expect the dollar index to potentially reverse and resume the downtrend. But for now, at least for the next couple of days, Monday and Tuesday, we can expect a potential bullish break above this upper trend line of the bearish channel, and perhaps the dollar index can rise as high as the pivot here by Wednesday and stall around this level before softer than expected inflation data would likely cause it to reverse course and resume the downtrend. Right, first support has been identified at 100.51, which is a swing low support. Actually, if you drag it all the way back here, you can see this is like a multi-swing low support that's been in place since December of 2023. This is very clearly a very strong support area for the dollar index. Right, and of course, first resistance for the dollar index can be identified at this level here at 103.64. This is like an overlap resistance that has, okay, maybe there's a 50% as well. Is there a 50% that we can use? No, not 50, maybe. Okay, no, we can't use any of that. That's fine. But it's almost like an overlap resistance here that I see, right? We see The dollar index previously finding support here in mid-July, after which it ran into resistance on the 8th of August, creating a nice overlap level here. So this first resistance at 103.64 is an overlap resistance. The pivot is also an overlap resistance that has the presence of two Fibonacci retracements, and of course the support is a multi-swing low support that has been in place since since the end of December. So take note, we are looking at a potential bullish breakout opportunity currently for the dollar index, right? So should this bullish breakout take place, we can expect it to rise up towards the pivot level here over the next couple of days. And by Wednesday, we have CPI data out of the US, which could cause the dollar index to reverse course and resume the downtrend, right? So these are the key levels for the dollar index on the daily time frame. Now, moving on over to gold, XAU USD is the instrument that tracks the uh, futures spot, which tracks the spot prices for gold, right? And we can see it currently trading around $2,497 per ounce. It has broken underneath the 2,500 level here, and if you look at it, gold prices have actually just sort of traded sideways, right? Gold prices basically have just basically traded sideways since 19th of August, right? Since 19th of August, it has ranged approximately between $2,477 per ounce and moving up as high as $2,531 per ounce here. So you can see sideways action clearly in place since the 19th of August. Now, of course, when we look at this level here, this is the intraday high 2529. Yep, this is the intraday high for gold at $2,531 per ounce, right? This intraday high was formed on 20th of August, and it's a level that has yet to be breached. So quite clearly, this is the first resistance for spot gold prices here. And when I look at the lower bound of this this sideways range, right, I actually see a nice overlap support level at $2,483 per ounce, right? So you can see previously this level functioned as a swing high resistance on 17th of July, another swing high resistance on 2nd of August, and functioned as resistance as well in mid-August, after which it proceeded to function as support on 22nd of August and finding support once again at the beginning of September. So this creates a very strong overlap level, which is actually an overlap support level, which in the current situation we are identifying it as the pivot, right? So the pivot is a strong overlap support level where price seems to have rebounded off once again today, right? So we can perhaps see a potential bounce here. Actually, wait, hang on, because we are expecting, if we do see a bullish breakout take place for the dollar index, then we should expect gold prices to drop lower. Remember, the dollar and gold share an inverse relationship or an inverse correlation. So that means when the value of the US dollar is rising, typically we should expect gold prices to be falling and vice versa. So if we do see this bullish breakout take place, then we should be expecting gold prices to be pulling back towards this support level once again. So there's a strong support level here, which is the pivot at 2,483, the overlap support level. Right, we can also run a Fibonacci retracement starting from this swing low on the 7th of August, going up to the all-time high here on the 20th of August. Let's pull up all the fibs. We're going to be using the 30 and 50%. I'll explain to you why. We can see the 38.2% align pretty well with the pivot, just underneath the pivot rather, highlighting a strong support zone here. And when I look across the 50% retracement, I see another nice overlap support level at $2,447. We can see here this level previously functioned as resistance in the beginning of August, after which it proceeded to function as support in mid-August. So this creates a nice overlap as well that aligns slightly below the 50% Fibonacci retracement. Right, so take note, should we see this bullish momentum in the dollar index continue or gain further traction, and we see a bullish breakout take place, then we are quite likely to see gold prices pull back towards the pivot and perhaps even break underneath the pivot as well. So take note, we may have a potential bearish breakout through the pivot for gold prices should we see, right, the dollar index gain further traction with the current bullish momentum here. Right, so these are the key levels for XEU USD, which is the instrument that tracks spot gold prices. Now, looking at XTI USD, XTI USD is the instrument that tracks WTI crude oil futures, and you can see crude prices have been in a strong downtrend uh, since 9th of July. Right, since 9th of July, we've seen it in a strong downtrend, but of course, it's been accompanied by very strong retracements to the upside. We see a strong retracement taking place here. Oops, strong retracement taking place here from 6th of August till the 13th of August, a period of 1 week, and another strong retracement taking place from the 21st of August till the 27th as well. So for another week, as we see strong retracements to the upside within this strong bearish channel here, or not bearish channel, but bearish momentum. Right. So once again, with XTI USD bouncing off its pivot, right? The pivot is actually a very significant support level. It's a multi-swing low support level that's been in place since 31st of May. Since 31st of May 2023. So that's from last year, right? 31st of May 2023 is a strong multi-swing low support level that's been in place since then, and we have seen crude prices bounce off this level once more. So we could potentially see it retrace a little bit higher. We did see XTI USD climb as high as $69.24 per barrel today, right? So we could see perhaps a little bit of retracement to the upside before we see XTI USD resume the downtrend. Now resistance, right? I see a strong resistance level here at $71.84. This is like a pullback resistance level. We see this level previously functioning as support, right? As a pullback support here on 16th of Jan this year, a swing low support at the beginning of February, another swing low support here on 4th of June, and also another two more swing lows on the 5th of August and the 21st of August. As this was previously a very strong multi-swing low support level, which now has been broken, of course, which means it can potentially function as resistance. So this is a pullback resistance at $71.84, which also has the presence of a 38.2% Fibonacci retracement. Now this retracement was found by starting from this swing high on the 26th of August, going down to the swing low here of last Friday, 6th of September, and we can see the 38.2% Fibonacci retracement actually aligned very well with the first resistance here. Right, the pivot, which is a multi-swing low support, also has the presence of a Fibonacci extension at 161%. Right, this extension level was found by running a retracement from here, this swing low on the 5th of August, going up to the swing high on the 12th of August, and we can see the extension at 161% aligned very well with the pivot as well. Right, so we can see here a very strong support area, and we could potentially see crude prices at least stabilize above the pivot and stage a minor rebound before resuming the downtrend. And finally, when you zoom out and look a little further below, I see another multi-swing low support, which took place on March, in the third week of March 2023, and once again at the beginning of May in 2023. So this creates another multi-swing low support here. It's almost like a double bottom, which has been identified as the first support, which is at $64.20 per barrel. Right, so these are the key support and resistance levels for XTI USD, which is the instrument that tracks WTI crude oil futures. Now let's look at the pound as well, and we'll cover the euro. Right, we've got labor force report out on what do you call this, Tuesday, tomorrow, right? Remember, in the pre-market we had identified this level here as a potential breakout, right? Earlier this morning we did the pre-market and we had identified this level as a potential breakout level, and we do see the pound dropping through the pivot level today, right? So we can see here it has broken through this pivot level here. So that means now the next pivot level can be identified at this swing high resistance, right? It's almost like, okay, maybe I don't need to drag it that far. Right, we can see here, oops. Right, this what was previously a swing high resistance now can potentially function as a pullback support, which has been identified at the pivot at 1.3008. So with pound coming under pressure, and especially if tomorrow's labor force report comes in weaker as well, we could see cable drop towards this pivot level here, right? We could drop strongly towards this pivot level here. Now the next support for cable is going to come in at this multi-swing high resistance, right? We see a nice previously as it was a swing high resistance on 8th of March and another swing high resistance on 12th of June. Now this level could now potentially function as support. We see a period of consolidation as well here in July, a little bit of support here in July, and resistance once more in mid-August as well. So this is a pretty decent overlap level, which we can identify as the first support. Now this level here also has the presence of a 61.8% Fibonacci retracement. And when we look at the pivot, there's a 38.2% Fibonacci retracement as well. So we see relatively strong support zones at the pivot and of course at the first support as well. And the first resistance is a swing high resistance that took place on 27th of August at 1.3260, which also has the presence of a Fibonacci extension at 161%. So this extension level was found by running a retracement from 17th of July down to the swing low here on 8th of August. And we can see the 161.8% extension level aligned pretty well with this swing high resistance. Remember, we've got labor force report out tomorrow, and should we see a weaker than expected report, that's quite likely going to cause the cable to come under pressure, and we can see it drop towards this pivot level, which is a pullback support at 1.3008. Right, and if demand for the dollar remains elevated and the labor force report out of the UK is much more weaker than anticipated, we may even have a potential bearish breakout take place here through this pivot. Now let's look at the euro as well. Right, since we've got the ECB meeting coming up on Thursday, 12th of September, where they're expected to cut the main refinancing rate by 60 basis points. So we could see the euro come under significant pressures, selling pressures on Thursday as well. As of now, it is currently testing a key pivot level, right? This is like an overlap support level here. We see the euro running the resistance on 14th of August, and after that finding support here at the beginning of September, and which creates an overlap support level, which is currently being tested. This overlap support level also has the presence of a 38.2% Fibonacci retracement, right? So we could potentially see the euro stabilize around this level here. But for now, demand for the dollar looks to be really strong, and especially if we do see this bullish breakout take place for the dollar index, that means we can probably expect a bearish breakout for the euro to occur today or tomorrow. So take note, there's a potential bearish breakout opportunity for the euro, especially if we see the dollar index make a bullish break above this bearish channel. So bullish break for the dollar index would translate, of course, into a bearish breakout, potential bearish breakout for the euro. And if this bearish breakout were to play out, we can then target the first support as a potential take profit zone. So the first support is a nice overlap level, right? It's a nice overlap level which was previously functioning as a swing high resistance in mid-March, swing high resistance again in mid-July, and resistance again at the beginning of August, right? And after which it proceeded to function as support on the 15th of August. So what was a strong multi-swing high resistance then proceeded to function as support, creating a nice overlap level at 1.0949, which we can identify as the first support. So if we do see this bearish breakout take place for the euro, we can then target a suitable take profit level at around the first support. Remember, a bullish breakout for the dollar index is going to translate, very likely going to translate into a potential bearish breakout for the euro. And if we do see the downward momentum gain for the traction, we can identify a suitable take profit zone at the first support, which is at 1.0949. Right. Okay. And let's see, we've covered gold, we've covered crude oil, right? Crude oil, we covered some of the majors as well. Let's look at the indices. Let's look at DE40. Right, DE40 is the instrument that tracks the DAX futures, right? As you can see here, equity markets, well, let's specifically for the DAX. If you look, let's zoom in on the DAX a little bit. The DAX made a new intraday high on 3rd of September, right? This is the prior intraday high for the DAX was formed on 16th of May earlier this year at around 18,930, after which it made its most recent all-time intraday all-time high on the 3rd of September at around 19,000. Right, since then it has proceeded to fall very sharply, right? Especially last week, falling very sharply last week, and it looks like it has stabilized today, right? Although the DAX did gap slightly lower, it has stabilized and rebounded very strongly. right? So we're expecting the DAX to pull back today towards this pivot level here. However, now maybe it looks like it could run into a little bit of this retracement here could run a little bit higher. So what I'm going to do is realign the pivot and the first support. So this pivot now is actually going to function as our first support. We're going to get rid of this, and we're going to bring up the pivot to this pullback resistance level here. Right, so what we're expecting now is for the DAX to rise up towards this level and potentially stall around here and potentially reverse to resume the downtrend. Right, so when I look at this level here, okay, we can get rid of 61.8%, and we can also now run a Fibonacci retracement from the all-time high on 3rd of September going down to the low of today. Let's pull up all the fibs. We can see that there's a 38.2% retracement level that sits pretty well with the pivot. Right, so this pivot level here is actually a pullback resistance. Right, previously you can see the DAX running the resistance from 23rd of July till the 1st of August, after which it dropped lower. And then this is a level which once again could function as a potential resistance barrier, and it also has the presence of a 38.2% retracement. So we're looking at a strong rebound in the DAX for now, for today, and it could potentially stall around this region here before resuming the downtrend. And if that downtrend were to resume, right, there is a pretty strong, I would say there's another closer support level, I think. Let me just look it up. There's a not 38, but okay, that's fine. We don't need the retracement. Actually, if you look here, there's another nice support level for the DAX at around 18,166. Right, so if we do see the DAX stall around the pivot and reverse to resume the downtrend, it could potentially fall back all the way down towards this pullback support level here, or like a swing low. It's like a multi swing low that took place on 2nd of July and then on the 22nd of July as well, right? Nice multi swing low support here and here, right? So this is where the DAX could once again stabilize should it hit the pivot and reverse to drop lower. Right. Now let's look at, okay, before I move on over to US 500, I'm going to launch a poll as well, and truly appreciate it if you guys can give your feedback with regards to today's webinar. All right, okay, now let's move on to US 500. So this is the instrument that tracks the S&P 500 futures, and similar market structure to what we saw for the DAX. And I was expecting the downtrend for US 500 to continue as markets reopen today, but it looks like the US 500 has gapped higher and is staging a pretty nice rebound. So what was this first resistance here is quite likely going to be our pivot now, and the pivot is likely going to be our first support. And of course, now we can get rid of a few things. Let's just adjust the levels. And of course, the first resistance is simply going to be this swing high resistance at the all-time high in mid-July. Right, so we can see here, right, first resistance is clear. It is the swing high resistance that occurred in mid-July, close to the all-time high. So that's where the first resistance sits for the US 500. The pivot level is also another overlap resistance. We can see it finding running into resistance here at the end of July, after which it proceeded to function as support on 22nd of August, and the 29th of August, thus creating an overlap level which can now be used as a potential overlap resistance, and that's where the pivot has been identified. Now, since with US 500 retracing higher and rebounding higher today, we can also run a Fibonacci retracement starting from this high on the 3rd of September going down to the low of last Friday, and we can see that this is the, I believe it's a 61.8% retracement that aligns very well with the overlap resistance, which is the pivot. And in terms of support, there's a nice overlap support level at 5,326. which also has the presence of a 61.8% retracement as well. So we are quite likely to see equity markets stage a nice rebound today, and that could continue tomorrow as well. However, should it reach up towards this pivot level here, which is an overlap resistance at 5,558, which also has the presence of a 61.8% Fibonacci retracement, we can probably expect the US 500 to stall around this region here. So that means if you have any long positions for the US 500, you can target the pivot as a potential take profit zone, right? Similar for the DAX as well. The DAX is also rebounding strongly today, so we can use this pivot level at 18,544 as a potential take profit zone for any long DAX positions. Similar for the US 500 as well. Right, okay. And let's see if there's anything else to cover. All right, if there's any requests, do drop them in the chat box uh, as soon as possible so we have time to go through the analysis. If not, then I'll just wrap up the session with another one or two more analysis. We can look at, we've covered the euro, we've covered the pound, we've covered the commodities as well, a couple of the indices. Let's see if there's anything. Okay, let's look at dollar yen. Right, dollar yen is always very interesting, of course, right, with intervention measures and the only central bank, well, yeah, probably the only central bank that's actually hiking, right? We've seen a rate hike take place at the end of July by the Bank of Japan, and it looks like recent comments by Bank of Japan officials as well as the governor is looking at a potential second rate hike in 2024 as well, right? So a strengthening yen, right? A strengthening yen is going to cause currency pairs like the dollar yen to reverse strongly, and of course the pound yen and euro yen as well. But for today, we are seeing strong demand for the dollar, right? As you can see, dollar index is attempting to break out of this bearish channel. So that means we also are seeing a nice rebound in dollar yen as well. So dollar yen, right? Okay, let's start with a clean slate. Is rising strongly today, looking to break above 144. Now, where is a potential pivot level or resistance for the dollar yen? Let's try and identify that. But before that is quite clear, the first support for the dollar yen, right, is at this multi-swing low level at 142.16. This is very clearly a strong swing low support that occurred on 5th of August, and there's something that's occurred once again last Friday on the 6th of September. Right, so first support is pretty clear. Now what about a potential pivot level, right? Let's see this. It is approaching like an intermediate resistance level here. I see a pretty decent intermediate resistance level here, which can be identified as a pivot, right? We see dollar yen stabilizing around 144 on 6th of August, and then once again stabilizing around this level once more on the 27th of August. So what was previously a strong support level could now potentially function as resistance. So this is a nice pullback resistance level at 144.11, which has been identified as the pivot. Now, if demand for the dollar is strong, right, if you're expecting a strong bullish breakout to occur through the bearish channel, then for the dollar yen, we can also potentially expect a bullish breakout through the pivot. Right, we can also expect a potential bullish breakout to take place through the pivot, especially if we see this demand for the dollar remain elevated. So we have a potential bullish breakout opportunity for the dollar yen, and should that bullish breakout take place, it's quite likely it's going to run into resistance at the swing high here that occurred on 2nd of September at 146.90. This is a swing high resistance that occurred on Monday and Tuesday at 146.90. Now we can also run a Fibonacci retracement starting from this swing high here on 15th of August going down to this swing low. You can see that this swing high resistance also has the presence of a 61.8% retracement quite close to it. Right, and if we do another retracement starting from this high on the 3rd of July down to this low on 5th of August, let's pull up all the fibs. We can see that there's also a 23.6% retracement that aligns very well with the 61 retracement. So we've got a Fibonacci confluence here. We've got a Fibonacci confluence that's identified by the 23.6% retracement, and the 61.8% retracement. So this is quite likely going to function as a strong resistance barrier for the dollar yen should we see a bullish breakout take place. So that means if the bullish breakout does materialize, we can then target a suitable take profit zone close to the swing high resistance here at 146.90, right? So if the bullish breakout does materialize, you can identify a suitable take profit zone at the first resistance, right? Okay, so these are the key levels for the dollar yen, and if I look at it, I dare say there might be an even pretty decent bearish channel here, right? There may be even a pretty decent bearish channel. There we go, right? Let's zoom in a little bit. You can see a couple of touches to the upper trend line and a few touches on the bottom. So we have a pretty decent bearish channel over here as well. And the intersection of the bearish channel, the Fibonacci retracements at 23.6% and 61.8%, as well as the swing high resistance at 146.90, do indicate a strong resistance barrier for the dollar yen. So if we do see this, should we see this bullish breakout materialize, it's quite likely dollar yen is going to run into serious resistance at around 146.40 and beyond. Right, so these are the key levels for the dollar yen based on the daily time frame for today. Right, okay, if there's no further requests, then we've come towards the end of today's session. Right, I do apologize for the technical issues that we faced at the beginning of today's webinar, but we managed to cover most of the usual stuff as well, right? We covered the dollar index, the major currency pairs, the commodities such as crude oil and gold, and of course the indices such as the DAX and the US 500 as well. So before we wrap up, take note, we are seeing a strong bullish, we're seeing a potential bullish breakout for the dollar index, right? And we could potentially see it rise up towards the pivot level here, which is an overlap resistance at 102.55. And on Wednesday, we have the CPI data for the US being released. And if we see another round of softer than expected inflation data, that's quite likely going to create headwinds for the dollar. So that means we could see the dollar index stall around the pivot level here by Wednesday and potentially reverse to resume the downtrend. All right, that's all I've got for today. Thanks everyone for tuning in to today's live analysis session brought to you by IC Markets. Do look out for all upcoming webinars for the rest of this week as well. All right, thanks everyone. Take care. Have a great trading week and catch you all at the next webinar.